Algorithm controls synthetic indices. It is not a real market. Forex is gambling. No one ever makes money from synthetic indices. How can you win a market controlled by derivative? Why are you still trading synthetic indices? Now, these are the rhetorics a lot of people have about synthetic indices. What are those things to do? Is synthetic indices really worth the hype? Is it really a trade to take? That's what we'll be reviewing today. Why I prefer synthetic indices against the normal Forex, currency pairs, and a whole lot of other things. My name is Mick Dariv, and this is Mick. First of all, I'll start with a brief introduction of myself. I am a professional, 100% sniper entry, amazing synthetic indices trader. I've been trading for the last 5 years, and I'm very good at what I do. I have made virtually all my money from synthetic indices, specifically derivative synthetic indices. And I'm proud to vouch for them today by making this video. I won't bore you with the beginning of my story. The link up here is going to tell you how I started and how I've been able to go over the struggles of trading and currently making huge millions from trading. In fact, I recently made $72,000, currently at $90,000 profit from 3 accounts that I've been holding for a while. And this is to tell you that if you want someone who really knows a thing to tell you about synthetic indices, that person is Mick Dariv, bam. So let's go straight to the point. It would be unfair to do this comparison without first of all trading currency pairs or Forex markets. Because, if I just do a comparison from one side, it'll be one-sided. And that is extremely wrong. So I'll first of all tell you that I've traded gold before. I've traded USD to Japanese yen. I've traded a lot of currency pairs in the past. And yet, now here we day. I'm not leaving synthetic indices. And I'll tell you why. First of all, we'll talk about the difference between the two, then the similarity, and then my own professional advice on whether you should go on with synthetic indices or you should hear all those people telling you it's fake Forex. There's real Forex and fake. They say that synthetic indices is fake Forex. Let's go to the differences between Forex trading and synthetic indices. Looking at 6 differences between Forex trading and synthetic indices. 6. The first one is cost of movement. Cost of movement. The second, trading times or availability. Trading times availability. The third one, brokers offering the trading instruments. The fourth, number of tradable assets. Number of tradable assets. The fifth, trade volumes. Trade volumes. And the last one, platforms that offer these indices. So let's start with the first one, cost of movement. Forex pairs move due to relative strength of the real currency of different countries. The strength of these currencies varies due to factors such as geopolitical issues and economic indicators. For example, the Russian currency ruble lost value after sanctions were imposed on the country by the West. On the other hand, synthetic indices are stimulated markets that move through random numbers generated by a computer, otherwise known as algorithm. This means that the synthetic indices are not affected by fundamental events like wars or tsunami or any of those things that affect, the normal Forex markets. The algorithm that moves synthetic indices has been programmed in a way that it will reflect different types of movements across the different types of synthetic indices. For example, the movement of volatility 75 is different from that of boom and crash indices. Now let's look at how volatile Forex market is and how volatile synthetic indices is as well. Volatility in Forex trading varies at different times of the week due to different factors. For example, the US dollar experiences high volatility when the non-farm payroll NFP is announced every month. Forex markets also generally have low volatility during the start and the end of the week. The volatility peaks during the middle of the week This makes Forex tricky to trade at other times, and you have to find the best time to trade. While for synthetic indices, they have constant volatility all year round. Come on. Each particular synthetic index will always have the same rate of price change at any given time. Thus, there is no best time to trade synthetic indices since their rate of movement is the same all year round. Some synthetic indices like V100-1S and V75 are very volatile. They experience huge price changes in a short time. This allows traders like myself to make huge money from it. Such huge price changes in a short time are not common in Forex trading. Man, in terms of volatility, synthetic indices is a good. Let's look at the third one, availability and trading times. Forex currency markets are not open every day. I think it's probably between Mondays and Fridays when the world's financial centers are open. The markets are closed on weekends and also during holidays like Christmas and the rest. Now, let's talk about the part where synthetic indices fall short on something. The brokers that offer them. Synthetic indices, currency pairs, Forex currency pairs and the rest rather, they have a whole lot. I think there's over 1,000 brokers that offer them. Probably more than 1,000. But then for us, we just have Deriv. The next, which is number of tradable assets. Different brokers offer varying numbers of Forex pairs to trade. Some brokers offer 90 plus Forex pairs. While on Deriv, there's about 50 Forex trading assets, I think. Yeah. But when it comes to synthetic indices, they are only, I don't think they are up to 20. For Deriv now, we have volatility indices, which is about probably more than 11. We have synthetic, we have step index, we have range break, we have, I think there's even a basket indices. But no, we're having measurable things to trade now. Yeah. So now let's talk about the trade volume. This is also another part where synthetic indices fall short. I know that as of 2019, I think I searched it online for you people. Yeah, it says here that as of 2019, Forex market had a daily volume of about $6.6 trillion. That's a huge amount of money. But synthetic indices, I don't think we know rich. Yeah, well, it's less smaller for synthetic indices than. Now, what are the similarities between these two things? The similarities between Forex trading and synthetic indices. The rate of price change is measured in pips for both of them. Both can be traded using price action. Both can be traded as binary options, for Deriv, and both can be traded as CFDs as well. Both can also be traded using leverages, and you can trade synthetic indices and Forex using a demo account. Both can be traded using bots. That's, bots, what's it called again? Yeah. And I've had friends who often jump to synthetic indices whenever they make losses in their currency pairs. Synthetic indices is life. Oh, come and join us and let's make them together. This is me, Deriv. I hope you enjoyed this video. Ciao, ciao.